just a quick note on everybody asks me all the time. I get asked about how I get into trading, how I became a full-time trader, and it's a kind of a funny story. About almost 15 years ago now, I was part-time trading, but I was working in IT. I was working for a computer software company, and also we had a server farm there where we were doing services for companies all over the country using our servers. So I was doing that. I'd been doing it for a good long time. But anyway, I was a good friend with my boss, and just before Christmas, about 15 years ago, my boss had told me that they had run into some financial problems, very competitive business, and he had to lay me off. That was just like 2 weeks before Christmas. So I'd been trading part-time, and I said, well, this is probably a good opportunity for me to see if how I can do trading full-time. I was kind of forced into it. It wasn't a plan that I had, but I was forced into it. So as it turned out, December was okay. I made a little bit of money, but not much. Christmas trading, New Year's trading is a little slow. January had a really, really good month. February was really good up to about halfway through the month is when my boss called me and asked me to, said he had gotten his financial problems straightened out and I could come on back to work on Monday. And I told him I appreciated the offer, but at this point in time, I couldn't afford to come back to work for him. Trading was going too good and I was going to stick with it full time. So that's how I actually get into it. That's a little bit unusual. A lot of people, when they go from part-time trading to full-time, they have a specific plan that they work through. They look to hit specific benchmarks in their trading and before they switch over to full-time, because it really is a big difference when you go from a job with an income to just trading full-time. But anyway, that's how I get started, because I mentioned that because so many people ask me about it all the time. Okay, let's get started here. All right, first thing I have to do, of course, is get the disclaimer out of the way. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so we're going to get going here. If you have any questions along the way, just put them in the question box. And if I can't answer them, if you put your name and number in the chat box or your Skype username, Rory will give you a call sometime later today or over the weekend to answer those questions. He's not going to try to keep calling you. He's just going to call you one time and answer that question. So if you have any interest in that, just go ahead and put that name and number in there or your Skype username. This is just this is a graphic of the SPY super system that shows it runs on Thinkorswim. I'll show you that. I don't trade on Thinkorswim now. This is important. I run the software, the SPY super system software on Thinkorswim. That's where you'll see the charts and all the indicators, but I don't trade there. I trade off of Tradia using TradeHawk. You do not have to trade on Thinkorswim to have the Compass or the SPY super system, which is Compass system is actually the actual software. The SPY super system is expanded. Okay, so the SPY super system is here. What we do with this SPY super system is we track institutional trading, institutional money flow. That's what makes a big difference. And I'm going to get into some detail on that. This is just kind of a graphic of the text alert service on the high probability trades we take. If I find a high probability trade we're talking about in the room, it gets posted in the room, it gets posted on a Discord room we've got, and I send it out on a text alert to anybody who's a member of the text alert service. All right, up front here, before we usually we do the offers at the end, but for today I want to stick this up front. This is really a tremendous offer, and I'll put it up here and then we'll cover it again at the end of the day. But this is what they call a Black Friday special. But and if anybody's familiar with my room alert service and stuff, you'll be familiar with this. But what they're offering here is basically you can get a free 2-week trial, and then after 2-week trial it rolls over to a 3 months. But the big difference here is usually the alert service and the trading room are separate subscriptions. This alert service and the live trading room become the same. You're getting them both for one price. So basically, you're getting the alert service and the live trading room together. So you can see here it's going to be after you get a 2-week trial, then it goes to a 3 months after that. Basically, you're going to get the text alert service. You're going to get the live trading room. You're going to have the my options here, which is the wise way to trade, the masterclass. You don't need the Discord because you're going to get the alerts. So the wise way to trade options, about a 30 module video library of all the different strategies we use. So that's a really pretty spectacular. The quarterly subscription is $396. Will be activated after the trial period. If you want to get it annually, if you want to get locked in on a price for the alert service and the room, this is really a really good deal. $11.96 for a year, and that would be renewable every year for $11.96. And that would be the text alert service and the trading room. Typically, you're only going to get one, not the other. All right, and this is a yearly price, $11.96, and one-time payment. This is actually a lifetime. This is a lifetime subscription to both the room and the alert service, with the Discord and with the wise way to trade options. Again, the video library. So we'll go into that in a little bit more detail. But just so you're aware of what the offers will be, I'm going to go over it again at the end. But this is really a pretty special, really special offer. Basically, you're getting buy one get one free. You buy the alert service and you get the room as part of the package. All right. So first thing I want to talk about, and if you've ever heard any of my videos or gone through my webinars, you've seen this a few times. But what I always want to talk about is very important for retail traders to understand what moves the market, because the only way you can be consistently profitable is to be trading with what moves the market. And what moves the market is the institutions, which is this big marble. Now, retail traders such as myself and likely everybody here, we're retail traders with these little small marbles. When we're trading by ourselves without any institutional or any significant institutional involvement, all we do is cause chop and chaos in the market. The market's just going to chop around. There's no trend. We cannot set trends. We can't break trends. All we do is fight against each other and basically not going to make much money. Now, the institutions is what drives the market, and this is what we need to identify. Institutions are, you're probably aware, Goldman Sachs, JP Morgan Chase, HSBC, all the big investment banks who have trade desks, and they also have programs that trade automatically called algos. Algos create about 80 to 85% of all the volume that goes through the market coming in off of algos. Those are programs that are written by these institutions that look for specific conditions in the market and then trade off of those. All right, and they can take advantage of retail traders who don't understand this very easily. But now institutions also include pension funds, big, huge billions of dollars of pension funds, state employees, firemen, policemen. They have huge pension funds. Then you have all these hedge funds. Again, billions of dollars in hedge funds. And finally, you also have mutual funds. T. Rowe Price, Vanguard, huge amounts of money in all of these institutions. So this is what moves the market. And our job as a retail trader is to identify if when a trade is taking place, are the institutions in there or are they not in there? If the institutions are in there, then we want to be with them, whether they're buying or selling. If they're not in there, we don't want to be in the trade, right? So this is really important that we can identify when institutions are in the trade, and that's what the SPY Super System software does for us. Okay, now I have a couple of rules to trade by in the room and in the alert service. Pretty basic rules. We trade the best and skip the rest. Seems simple. It's not that simple. The whole idea is you got to find the best trades and skip the rest. But the important part of this is you have to be patient. We're only waiting for the very best setups that we can find. And you know, there's thousands of trades going on, millions of trades going on all day. Thousands of stocks out there, 6,000 stocks that you can be watching. Our job is to find the best and trade them and skip everything else. Now, the other thing I emphasize, and I emphasize this in the room every day, is our objective is not to make trades, which sounds a little counterintuitive, but it's not, because our objective is not to make trades. Our objective is to make money. And the reason I point this out is because a lot of traders overtrade. I mean, it's one of the really big problems a lot of traders have is overtrading, and they get bored watching the market. They're getting FOMO, the fear of missing out on trades. They sit there for an hour. We haven't taken a trade. I got to take something, and they get in there and trade. It's going to kill you. I mean, it's going to kill your account. So our objective is not to make trades, our objective is to make money. And what this is saying is, please be patient. Wait for the stocks, wait for the setups to come to you. All right. And now, as a profitable trader, if you're going to be a consistently profitable retail trader, you need an edge. And we have a big edge. We have an edge, which is the right line compass system, which is actually the SPY super system when we add scanners, et cetera, in there. So it's called the compass system. Then we trade relative strength and relative weakness. Now, this is important, and most retail traders don't understand this. This is not RSI. This is how is the stock trading versus the SPY. If the SPY is trading sideways and down, and you have a stock that's stacking green candles, you've got relative strength. Vice versa on the short side. This gives you an additional edge when you're taking a trade, because if the market turns against you when you're in a trade, say you go long and the market is all of a sudden turns around and heads back down, since you've got relative strength, it's going to hold up much better. So this is really an important concept for trading the stocks that we trade. And then we're going to trade with the market trend if there is one. A lot of times there's chop, but obviously the last couple of days the market's been trending up. So which way do you go? Well, you go long. I mean, that's typically what we're going to do. And then you want to buy near support and sell near resistance. This is meant to keep you from chasing trades that take off up or down really quickly. Don't chase them, because almost always, not every time, sometimes you'll miss these, but if they're shooting up in the morning and you get nervous, you have fear of missing out, so you go ahead and start buying, they're going to end up reversing most of the time, and you're going to be trapped in there at the high. And now you're red as the thing comes back down. What you do is you wait for it to come back down to support and bounce off support, creating a confirmation that it's back into the original trend. Then you get in. That's really important, and we'll talk about that. All right. So the compass system, which is a piece of software, which is also called the SPY super system when I include the scanners and other things in here, but it identifies the highest probability trade setups, while sidestepping setups that look good will fail more often than succeed. Really important. This is how we find the best trades. It does this by identifying when institutions are driving the move and when they're not. This is a really key concept. We're going to be in the trades if the institutions are in the trades. We're not going to be in the trades if the institutions aren't in the trade. Now the software does this by analyzing fairly complex trading data, but it displays the results in a really easily identifiable visual format, which will show you. Basically, it's colors. Colors are going to let you know whether the institutions are in there, long or short, or if they're not. So this visual element makes it possible for even new traders to find high probability trades. You're not going to have to dive into a lot of real deep technical analysis to make a determination if the institutions are in the trade or not. And that's makes all the difference. So again, this gives us our edge. We're only taking trades that are being driven by institutions. We're trading stocks that have relative strength or weakness versus the SPYs or the Qs, and we're trading in the direction of the overall market. If you're doing these three things here, you've just leaped ahead about 96% of retail traders. Now it gives us an edge because our trades are going to be supported by institutional buying or selling. The stock will be outperforming either the SPYs or the Qs, and they'll be moving direction of the overall market. Big, huge edge. And most retail traders just have no idea what's going on with institutions or relative strength or relative weakness. All right. So this, I just kind of want to cover how I find high probability trade setups and how I and everybody that uses this methodology. The first thing to look at is when you look at a stock, you have to look at the daily chart. It's important that the daily chart is, if you're going to go long, it's important that the daily chart is bullish. Please don't be taking trades long if the daily chart is bearish. It's counter trend trading. If the stock turns against you during the day, you can't stay in the trade because you can't hold it overnight. If you've got a good, strong, bullish chart on the daily and the stock pulls back a little bit, but it's still bullish on the daily, you can ride it for a while, a day, a week, 2 weeks. But if you're going against that, if you're trading the stock long that has a bearish daily chart, you're going to get out. So this is important. And then we use the 5-minute chart to align as well. So we're looking for a good entry off the 5-minute chart as long as we've got a good daily chart to trade on. We trade again with the trend of the stock and the market. The compass indicators, the SPY super system indicators, have to align. When I find a stock that we're going to trade, I have to know that the institutions are in there. If they're not, I'm not going to take the trade. I mean, it's really pretty simple. These are like check boxes. You have to have each one of these has to pass. Then we look for relative strength and relative weakness. If that checks off, then we look to see if we're near support or near resistance for a short. If we're near support, then we can take a long. If we're near resistance, we can take a short. If we're not near them, we can set alerts to let us know when the stock gets there. So if a stock hits all these check boxes and drops out, then it becomes a prospect. Not necessarily a trade, but it's a prospect. Then we're going to do some deeper analysis on it, but that's what we need to know. And this is just basically, I just kind of wrote this out for the funnel method for the highest probability trade setups. And I have a video on this, on how we do this. Again, stock to be traded should have daily and 5-minute chart aligned. The compass indicators, also called the SPY super system indicators, they must align in the direction of the trade. These two things right here are going to give you a huge edge, because you're going to be in there with the institutions, and you're not going to be in there when the institutions aren't in there. And so, a couple of things to note here on when you're trading off the 5-minute chart, which we do for like the SPY super system, or if you were trading an intraday trade on a stock, the stock price should be above the what's called the VWAP, the volume weighted average price for long, and below it for shorts. VWAP is something that all the institutions use. It's an indicator that's on the chart, which I'll show you, but that's really, really important. And then we want to, of course, enter near support or near for support for longs and near resistance for shorts. And have patience. This is the key thing. I harp on this every day in the room. You've got to have patience. Please don't overtrade. Have patience. Wait for the trades to come to you. All right, so in the room and on the alert services, these are the strategies that we use. We do a lot of straight calls and puts. Obviously, this is a fairly common thing. We use things called debit spreads using weekly options expiration. That's a little unusual, but using weekly options expiration, but they have a much better ROI than going out a couple of weeks or 3 weeks. I also use something called the time spreads, which is a calendar spread. This is done over earnings, only over earnings. And this is non-directional. We don't care if the stock's going up or going down off the earnings. We're just capturing the volatility crush that comes out of the option prices, which we'll talk a little bit here in a minute. We're going to talk about options, but that's all we're doing is capturing the volatility crush once the earnings come out and the market makers pull that extra premium out of the options. We also have something called the weekly ATM strategy. This captures premium by selling puts week after week on a stock that is neutral to bullish. And then we keep a longer term, like a longer out in time, long put below the price that we're selling the puts at to capture, to give us a safety net. In other words, if the stock turns down, we're protected to the downside because we have that put. And that also reduces the premium, the margin way down on those kind of trades. And the credit spreads are done to capture premium over a few weeks. And then one system I'm going to talk about here, which is this is called the SPY super system. This is a methodology that we trade in the room off of 5-minute charts. Now, I don't put alerts out on these because these are very quick trades. But I'll show you the results we've had with these, and we're trading the SPYs, the Qs, and the IWM off a 5-minute chart using the compass. In other words, the SPY super system lets us know whether institutions are trading the SPY or the Qs or the IWM, and we trade those. Now, they're quick trades, anywhere from 5 minutes to an hour. So they're very quick trades. All right, so we'll cover that as well. All right, and the alert service, who's it for? Well, it's designed for day trades and short-term swing trades. You're not going to see any trades in there that go out 6 months or a year. Everything is going to be, typically we're going to be out a few weeks in the option, but we're going to be getting out of those trades intraday or at least 2, 3, 4 days. Most of the average trades last a week or less. And it's designed for traders who can't or don't want to watch the market all the time. And you'll get real-time alerts on the highest probability trade setups. When I send out an alert, it's been taken in the room, or we take it in the room, I put the alert out, we all get it at the same time, and that gets you the alert on that. It'll tell you how to get in, etc. And I'll go over the details of exactly what comes out in that. Okay, and how do the highest probability trade setups, how do we find these? Well, there's that institutional involvement again. We're looking for trades that the institutions are in. We also look at market internals. We want to see if the upside volume on stocks that are moving up is more or less than the volume on stocks that are moving down. That's the market internals. And then we do deep technical analysis, deeper technical analysis. All right. Okay, so this is an equity curve. Just to show this, this is what the alert service did from March 23 to June 24. It needs to be updated, but this is all it is just give you a graphic representation of what our curve looks like. This is based on putting $2,000 into each trade. This is what we've done. It's very consistent year after year. You know, you have a losing months here and there. Remember, I've had 3 losing months in 35, but you know, that's not too bad. Most months we win, and most of it's very consistent, but that's what you want, an equity curve. It goes from the bottom left to the upper right. Steve wants to know if I'm going to show live shots of my dog taking trades. Occasionally here my dog will start barking in the background. All right, first thing what I want to do is I want to go through the basic options part of this. This is going to be pretty basic. So if you know a lot about options, this is all going to be redundant to you. But I do want to run through it because there's a lot of people that want to trade options but aren't really that familiar with them, or they trade them a little bit. I'm going to try to give you some information here that's going to be really helpful. This is just a basic option chain. It's going to look like this in any platform you have to use. This is back from March, but this is Bristol-Myers, and this is an option chain. And what are the key things we're looking for in here? You can see that it was trading at 53.79, right? These numbers across the top, or these are dates across the top. These are expiration dates, all right? So every option has an expiration date. Some stocks have weekly expirations like this, like Bristol-Myers does. Some of them only have monthly expirations. And stocks like the indexes, like the SPYs, the Qs, and IWM have expirations every day. They call them 0 DTE, 0 days to expiration, and we take advantage of that. But this is the expiration date right here. Right, so this is one thing that you need to know. The next thing is the strike price. This is the price, the option that you're buying based on what that stock price is going to be or what you expect it to be. Now, if you see this little shaded area, the stock's trading at 53.79. The shaded one is 54. That's called an at the money option, either a call or a put. It's at the money. Okay, so that 54 is as close you can get to 53.79. So that is considered at the money. Anything that's below that on the call side, this is calls and these are puts. Anything below 54 on the call side is in the money because the stock price is above that. Okay, anything below 54 on the put side is out of the money because the stock hasn't got back down that far yet. All right, so that's important. In the money is right here. At the money is here at 54. These are in the money calls and out of the money puts, and vice versa below. These are out of the money calls because the stock hasn't reached there yet. All right, so that's your strike price. This is your expiration date. Now, what it shows over here is this is the bid price, and this is the ask price. This is how much somebody's willing to pay for it, 61 cents, so $61 a contract. And this is what somebody is willing to sell it for, or the ask price, 66. So when you buy or sell something like this, typically you're going to get filled somewhere in the middle, somewhere around 64, 65 cents on something like that. All right, so that's important because you want to have options that have fairly narrow bid ask spread. Sometimes they can get really, really wide. What platform is this? This is I think this is on TOS, I believe. I think it's swim. But you know, the information is the same. All right, so this is again 54. Now, one other element on here on this option chain, and this is called an option chain. This is called the delta. Now, delta, if you look here, delta on this at the money at 54 is at 52. All right, and we're going to talk about this delta as one of the Greeks, but you notice that it's 52. What the delta tells you, and I'll reiterate this, is how much will your option price move up if the stock price moves up $1. So if the stock price moves up $1, your option price is going to move up 52 cents. All right, you notice over here on the put side, the delta is 48. The put option and the call option are going to add up to 100. All right, so this tells you how much is the stock going to move, how much the option going to move if the stock moves up $1. Right, so those are the elements in here that are pretty important. Yes, it's very important, Steve, for sure. Okay, now, one other thing is there's a thing called OI and volume. This is open interest and volume. This tells you the number of contracts that were open on that stock, how many were open at the beginning of the day, and how many have traded. Now, if we look at the 54 option here on Bristol Myers, for example, what you've got is 643. This is the total number of contracts that are traded today, both bought and sold. All right, 643. That's a pretty high number. And then the 1,004 is how many option contracts were open at the beginning of the day. This open interest is not going to change until the beginning of the next day. This 643 is not included in here. All right. So at the end of the day, they'll take all the ads, take all the ones that were bought, the ones that were sold, and they'll come up with a new number. But this is important because this indicates how much liquidity is there in the option. The higher these numbers, the easier it is to get in and out of the trade. All right. So there's your option chain. All this information is going to look the same on all the platforms. And you can include some other things in here, but I'm not going to go into them right now. All right, so what we're going to talk about here are what options are. We want to talk about what makes up option premiums. All right, intrinsic versus extrinsic value. We're going to talk a little bit about the Greeks. I'm not going to get into everything, but we're going to talk a little bit about the Greeks. We start strike price and expiration date. We talked about volume and open interest. We've already talked about, and we're going to cover some of the primary option trades that there are, and I'll talk about the primary ones that we use in the room and on the alert service. And I'm also going to give you a list of, if you like a stock long, I'm going to give you a list of the bullish option strategies. There are multiple strategies you can use. And then there's bearish option strategies. And then there's other strategies you can use called neutral. You don't care whether the stock goes up or down. There are option strategies to trade neutral strategies. So we'll cover that as well. And I'll cover a little bit about the trade setups. I'm not going to go into too much detail on this because it's a little bit too time consuming. Okay, so what are options? All right, so you have calls and puts. All options are always made up of calls and puts. That's it. They may sound kind of esoteric, but you either have calls or puts. Now they also come with what's called the rights and obligations. I'm just going to touch on this quickly. When you buy a call or you buy a put, that gives you the right to buy or sell that stock at the strike price you selected at or before expiration date. You have the right to do it. You don't have to do it. All right. Now, if you're selling something, you're selling a put or selling a call, you are now obligated to supply that stock to the person who bought it from you if they demand it. In other words, if they exercise their put or their call, then you're going to be assigned. You're going to have that stock assigned to you. You'll either be long on calls. You'll be long stock if you have calls, or you'll be short stock if you have puts. But it's important to understand the difference between rights and obligation. So when you're buying calls and buying puts, you don't have to worry about it. You only take the stock if you want it. If you don't want it, which you usually don't, usually you're just going to sell the options for a price. But be aware of that, right? And now you can only buy or sell. That's all you can do. So if you buy, you are long a call or long a put. You buy a call, you're long. You're expecting the stock to go up. If you buy a put, you're expecting the stock to go down. That's called being long. When you sell, you are short a call or short a put, right? So if you're selling a call, you're expecting the stock to go down. If you're selling a put, you're expecting the stock to go up. Please don't do this without being inside of a spread. And especially never sell calls, what's called naked. If you sell a call naked, you're exposing yourself to almost unlimited risk. And this is the problem. All of the strategies that we use in the room have what's called defined risk. You can never lose more than what you're putting into the trade. If you sell a put or you sell a call, especially if you sell a call by itself, what's called naked, then you can get in really, really big trouble. So just be aware of that. So I would suggest don't ever do it. So again, you're buying a call. It's called being long a call is bullish. Selling a call, short a call is bearish. So buying puts is bearish and selling puts is bullish. We just kind of covered that. That tells you what you can do with options. That's all you can do with them. But you can use lots of fancy combinations to come up with different strategies. But it's all calls and puts, buying and selling. That's it. Okay, so what makes up an option premium price? When you buy an option, what are you paying? All right, well, the options can be at the money, as I mentioned before, that Bristol Myers 54 was at the money. They can be in the money. If you were looking at, let's consider like a Microsoft at 100, right? So if Microsoft's trading at 100, the $100 call and the $100 put are considered at the money. On Microsoft, if you are buying a $95 call and the stock's trading at 100, that's an in the money call, all right? And out of the money call would be like 105. The stock hasn't got there yet. So those are the three things that when you're talking about options, they can be at the money, in the money, or out of the money. Now, what makes up this option price? Well, the first thing is the stock price. So let's take a look at, say we have a $95 call on Microsoft when it's trading at 100, all right? Well, the stock price is 100. We bought a $95 call. That call is worth at least $5 because it's $5 less than what the stock's trading for. In other words, if you took that $95 call on Microsoft and if you wanted to exercise it, then you're going to be able to exercise it and sell the stock at 100. Okay, so you would be making $5 on it. So the stock price is part of the value of the option price that you're buying. Now, there's a couple of other things that go into this. All right, there's implied volatility, which is how fast is the stock expected to move up or down. The more volatile the stock is, the higher the option price is going to be. They're going to jack up the option price based on how volatile that stock is. And the last thing is what the time decay. How much time is there between the time you buy the call or you buy the put and when it expires? If it expires this week, if you buy it with a week, the time decay is going to be really fast. It's going to decay really quickly, and they're going to add a little bit of time into that option price. If you go out a month, there's going to be a lot more time decay because there's a lot more time for the stock to get to that level. So the market makers are going to add more premium because there's more time. So the time is going to be the option price is going to be made up of the stock price, the implied volatility, and how much time there is on the option. All right, and we're going to talk about intrinsic value here. Okay, so what's intrinsic versus extrinsic value? And this is kind of important to understand. So intrinsic value of an option price is how much of the value is in the money. So in this case, I'm using $50 as an option. So you buy a $50 option on a $55 stock. So that's in the money option, right? So $5 of that premium that you're paying for that option is considered intrinsic value. It's always basically the option price minus this price of the stock. So you've got $5 worth of intrinsic value built into that. So if the stock goes sideways for a week and still trading at 55, you're still going to have $5 worth of intrinsic value in there. All right. Now the extrinsic value is the option value minus the intrinsic value. All right. Let's not overcomplicate this. If you bought this $50 option on a $55 stock, and let's say you don't pay $5 for it, you pay $6.50 for it. All right, so you're paying $6.50. You've got $5 of intrinsic value and $1.50 of extrinsic value. All right, you're paying an extra $1.50 for that option above what the actual value of it is, and that's made up of implied volatility and time decay. That's what the market makers are adding to the price of that option to come up with what you're going to pay for it. So the further out in time you go, the more expensive it's going to be, obviously, and the more volatility there is in the stock, the more expensive it's going to be. So if you're trading an option on a stock that moves around a lot, you're going to pay higher premium for the options. But this is important because it's important to understand that as for the option price to go down, what's going to happen is if the stock goes sideways, the only thing that's going to be reduced in your option price is the implied volatility if that changes, and the time left. So if you're in a trade at 650, for example, and you paid 650 for it, the stock moves sideways for a week, you've got a week less time left on the trade. It's going to reduce the value of that option. So the option may go from 650 to 620. They may take 30 cents off of that because you've got less time to expiration date, right? So that's why it's important to have intrinsic value in your option, which means you want to be buying in the money calls and in the money puts. You don't want to be buying out of the money calls or out of the money puts, because if you do that, the option premium is made up exclusively of volatility and time decay, which means that that whole premium you paid is going to be subject to that time decay and volatility change, and you're going to get killed. You're going to get killed on that thing. So stick within the money calls and in the money puts. Okay, so the Greeks, we talked about one of them here a minute ago, the delta, how much the option price moves in relation to the stock price. Stock moves $1, delta of 50 means the option will go up 50 cents. All right, so, and as the stock moves up, your delta is going to go up. So if the stock goes from 55, from 55 to 57, right, your option, which had a delta of 50, that 50 is probably going to go to 55 or 56. So as the stock moves up, your option will move up a little bit faster as the stock moves up in price, because your delta will go up. Theta is the time decay, which we talked about. It's the decrease in value of the option price as the expiration date approaches. Now, it's important to understand that the time decay is not linear. It doesn't decay at the same rate. Every single day is not the same. If you're out 3 weeks on an option, the first week or so, the time decay will be slow. And then as you get closer and closer to the expiration date, the time decay will accelerate and accelerate. In the last week and then the last few days, it accelerates like crazy because there's no time left. So the time decay is coming out of there really, really quickly. And the last thing here is I'm going to talk about is gamma. This is the rate of change in delta. So if the stock moves from 55 to 60 and you got in with a delta of 50, the delta may go to 52 or 55 or 56. How much it moves, how much that delta moves, is going to be dependent upon what's called the gamma. The gamma is the rate of change in delta. So a high gamma means the option price can change dramatically with only a small price in this change of the stock. Okay, so those are the Greeks. Now, the primary option strategies that you can use, I don't use all of these, but obviously long calls and long puts. Put credit spread, a call credit spread. This is buying a credit spread. You're buying a call and selling a call, or buying a put and selling a put to create a spread and collect premium. You can do a debit spread or a call debit spread. This is where you, for example, buy a call and sell a higher price call to reduce what it costs you to get into the trade, but you have a debit on that. It's called a debit spread. The calendar spreads, which is I mentioned before, is I call them time spreads. We use them on earnings. Basically, you're selling like a call for this week and then buying a call for next week. So you've got different expiration dates, same strike, but different expiration dates. You're buying one and selling the other. There's a thing called condors or iron condors. I don't use these. I don't like this particular strategy. It basically is putting a credit spread, a put credit spread below and a call credit spread above the price to collect premium, but I'm not getting into details on it. I don't like them. You can have 96% win rate over 6 months, and one trade will wipe it out. There's also a thing called butterflies, where you're creating a trade where you try to pick where the stock price is going to end at expiration. And then there's strangles and straddles, which I do use, and these are non-directional trades. Straddles and strangles, you're only looking for the stock to move. You don't care which way it goes, you just want it to move a lot. Michael, is there going to be a replay of this? Yeah, you'll get a video replay of this whole webinar when it's completed. All right. All right. So those are the primary option strategies that there are, and the ones that I use. Now, this is a lot of people really like this because you don't think about this a lot. There's bullish and bearish and neutral option strategies. So when I look at a trade and I'm bullish on the trade, I have options as to which way I want to trade this. No pun intended, but I do have options to do this. I can, if I like a stock long, I can buy just long calls, or I can short puts. I don't, but you could do that. Or I could do a put credit spread or a call debit spread. All of these are bullish option strategies. And what I try to analyze is which one of those is most likely, and which one is going to give me the best return on investment, my best ROI, and how close to support and resistance levels that could influence the trade. Right, and on bearish sides, the same thing. You could be long puts, right? You can be short calls. Never do short calls. Probably should just take this out of here, but and it is what you can do. And I do call credit spreads and put debit spreads. This would be anything to do with the bearish strategy. And then for neutral, the iron condors are neutral. They're looking for a stock to trade inside of a particular channel. Straddles and strangles are neutral. We don't care whether the stock moves up or down. We just want it to move a lot. And then time spreads, which are based on calendar spreads based over earnings. And we don't want it. We want it to. We don't care which way it goes. We just don't want it to make any really big moves. All right, we want it to move inside of what the expected move is by the market makers. Do I like diagonals, Josh? You know, I've traded them before. It's not one that I use all the time. They're okay. I mean, I know a lot of people that use diagonals. I try to focus on the ones that I have the most confidence in. So that's what I do. So I don't do diagonals a lot. All right, so these are the setups. I'm not going to really spend a lot of time on this. There's put credit spreads and call credit spreads where you're selling a put or a call and then buying a lower strike price on the puts or buying a call at a higher strike price. The difference between the credit spread or put credit spread and a call credit spread is you're basically collecting money. You're collecting a premium when you do these, and you're expecting the stock in the call side, you're expecting it to stay above a certain price. On the put side, you're expecting it to stay below a certain price. But you collect premium. When you put these trades on, you receive a credit in your account right then. The debit spreads are basically a way to go long with a call debit spread or short with a put debit spread. But what it does is it reduces your cost because you're buying a put and then selling a lower price put. So your cost to your trade is a debit, but it's lower than buying a straight put. But the thing it does limit your upside potential because you're limited to how much you can make on that as the difference between the two strikes. The same thing on the call debit spread side. Again, calendar, I won't go into this much more in detail right now. I have videos on all of these strategies and how to use them. The calendar spread is the time spread that we use right here. And then the straddle and the strangles. Strangle is buying a call and buying a put, one strike or more away from the money. So if I wanted to buy a strangle on Microsoft that was trading at 100, I would buy a $101 call and a $99 put. Again, I would be out of the money on both of those, but just one strike out. And this is where you're not buying at the money, you're buying out of the money, one strike either way, because you're expecting a big move. A straddle is if I bought a $100 call and a $100 put on Microsoft at 100, that's a straddle. So basically a straddle is you're buying and selling at the money. Strangle, you're buying and selling one strike out of the money. Oh, you can move more than one strike if you want, but that's a straddle and strangle. And I do use these periodically. We had a couple in the room this week, as a matter of fact. Okay, now just to kind of cover options a little bit here, what is the best option to take? Well, as a rule of thumb, you always want to buy an in the money strike. Always an in the money strike. So Microsoft's trading at 100. You want to buy a 98, a 97, a 95. You want to buy an in the money strike. On the put side, you want to be an in the money put. On expiration dates, you're going to go I go at least 2 to 3 weeks out. Even if I expect this trade to close today, if I expect to get out of the trade today, I'm still going to go out 2 to 3 weeks. All right. And the reason for this is if the stock starts to compress or go sideways today, or maybe today or the next day, I'm gonna limit how much time decay I'm gonna have because I'm further out in time. I don't want that time decay to go against me too hard. So basically, we're gonna use an in the money strike, and we want to try to buy around a 65 to 75 delta. Okay, so when we're looking at a delta, you're looking at an option 65 to 75 delta, which is in the money. This is the rule of thumb. I mean, there's obviously going to be some variations to this, but this is really important. Okay, so that is that covers options. All right, and again, I covered a lot there, but I did want to try to share that with folks because a lot of people want to trade options, or they do trade options. I know a lot of people that they trade options. They're buying out of the money calls. They think that's the way to do it. They're going to end up losing all their money. Out of the money calls over long terms do not work because all you're doing is you're paying for time decay and volatility. That's it. So please don't do that. It's just they're cheap. That's why people buy them. They're cheap. I can get them really cheap. Stock makes a big move. They get thoughts of all this money coming into them, and they're going to clean up on this thing. Hold on just one second. Sorry about that. Had to let my dog out. Let me just get a sip of water here. My throat's getting a little dry. Okay, so that takes care of options. Now, I'm going to go into the results we've had in 2024 with the room and the alert service, but I'm not going to go over every single one. I don't put every single trade in here, but I do want to give you, the reason I share this is there's a couple of things I want people to be aware of. I want them to be aware of what kind of percentage gains we get on the stocks trades that we take. All right. And please don't be thinking that there's a strategy out there where you can make 500–600% on every trade. You may get emails like that, but it's not going to happen. And Steve says my dog is king, that's for sure. But anyway, this is what you're looking at here. These are the gains that we make on these trades. 10%, 43, 37, 32. You see, they typically run in the teens to up to around 50 or 60%. We did have 96 here in Boeing. We had Mara at 65. But this is a January 2024. We had a loss in Gilead. We take losses every month most of the time. But it doesn't really matter because this is what matters. January trade results, 20 wins, 2 losses, 90% win rate, 2,000 invested in each trade, netted $7,505. All right, and I'm using 2,000 as a baseline because I have to have something I can measure this stuff against. But some people use 500, some people use 1,000, some people use 10,000. So here's February. This was our best month so far in 2024. Again, a couple of losses in here. 24 wins and 2 losses, 92% win rate. I did show the alert service in here that month. 20 wins, 2 losses. We don't have as many trades in the alert service because the trades we take in the room we don't take in the alert service because it's either too late. Are those returns annualized? No, these returns are on trade per trade. That's not annualized. This is the win rate of the number of stocks that that's trades that we took that we won, 92% of them, and this is how much we made in the month of February based on $2,000 on each trade. Okay, so these aren't annualized. This is, if we get into the Bristol Myers, we made 40% on that particular trade based on the amount of money that we put into it. All right. In other words, on that 40% trade, if we put 2,000 into the trade, we made $800. All right, so this February right there. This was just kind of a recap of 2023, going back to last year, just so you can see the consistency we've got. Again, putting 2,000 in each trade during in the options room produced a profit of a little over 60,000. So if you had a $50,000 account to start 2023, you would have been putting 4% of your money into each trade. And as the account grew, it ended the year at 110,000. Your amount of money you put into each trade, if you were using 2,000, would have been less than 2,000 of the final account balance. That just kind of shows you the 2023 trade results. This was the first quarter of 2024 right here, 65 and 11, 86% win rate, a little over 18,000 in the room. Alert service, 87% win rate, a little over 12,000. All right. Second quarter, 65 and 14, 83% win rate. Alert service, 85% win rate, 14.8 in the room, and 11.7 on the alert service. Pretty good quarter. I mean, these, you can see they're fairly consistent. These are May trades. I'm going to just kind of speed through these, but I just kind of wanted to show you the results. These are some time spreads when I was doing a demo on time spreads or a webinar on time spreads. I highlighted these. These are the ones we do over earnings. See, we had, again, 15 wins and 2 losses here, netted 49.79. The profits go up and down. They say they're usually pretty good, but they go up and down based on how long we can stay in a trade. Profitability is a lot of times dependent on what kind of market you've got. How long can you stay in a trade? So this was the room here. We had 29 and 7. A lot more room trades in the room than we had in the alert service, but the alert service had a higher win rate. Right, so 5,700 in the room, 49. Is June. Kind of speed through these again. You can see a couple of losses, 25 and 4, 86% win rate. 75.90. So this kind of gives you an overview. It's I won't go over every single trade, but it gets consistent month after month. Typically, I've had, like I said, we've had 3 losing months since I started the service in January of 2022. So there are going to be losses. Just be aware of that. This was July. This was the alert trades. We only had 75% win rate. That's the lowest win rate I've had since I started. But again, you still netted 3,300 and 6,000 here in the options room. All right, so that's again, you can see 37, 17, 28. Just notice that the consistency as far as how much we make in these things. August, same thing. Whoops. 17 and 2. The room 8 and 1. Not a lot of action in August. Again, that's a slow month. You know, a lot of the traders are out. We don't have any Fed meetings or anything like that, so very slow month. But still, 2,500 is not bad for nine trades. Okay, so I'm going to talk also here about the alert service itself. Now, the alert service, most trades are held for less than 30 days. Absolutely, Josh, most of them. Very few go beyond 30 days. Now, I sometimes I'll go out 2 months on the options if I want it to be a swing trade and give myself some time. But typically, they're going to be closed in a couple of weeks, maybe. But I have gone as far as a month before. But typically less than 30 days is going to be the majority of the trades. All right, so on the alert service, what you're going to get when the alert goes out, you're going to get obviously the stock symbol. You're going to get the option strike price. You're going to get the expiration date, and you're going to get the price to pay, and that could be a range. Could be $1.05 to $1.10 or $1 to $1.05. Now I'm going to send an alert out when I take the trade. And then I'm going to send another alert out when I have determined what we want to try to sell it for. So you're going to get 2 alerts, and then you could get more because I may change the price that we're selling it for if the price is not going the way I expect it to, or I think we can get more for it. I'm going to change that. But you're going to get at least two alerts for each trade. And when you get the alert to sell, you want to put that into your platform as good till canceled. Right, it's really important that it's good till canceled, so that if you're not available in the morning when the market opens and we get a big gap up and the stock hits your sell price, you don't want to miss that. So you want to have a good till cancel trade on all of the closing trades. Do I recommend we mirror what you do? Well, I mean that's what the alert service is. Okay, it's mirroring it, mirrors the trades, but like in the room, or anybody that has the SPY super system or the Compass system on software, you know, I have a lot of members that take their own trades because I can't see every trade, and I'm not going to take every trade, but there's a lot of good trades. Does the room have the alerts in there also? Yeah, in the room, Michael, I have an alert service in the room. In the room, we actually put the trades. I have a notepad in the room where all the trades are posted as we take them. They're also posted in a Discord room where you can see them over there as well. All right, so there's the alerts. Now, the question some people ask is, how do we achieve these tremendous results? We were able to identify when institutions are driving a trade. Where have we heard this before? All right, this is really important. And we check when the market internals are heavily bullish or bearish. Now, I say here that we only take trades when both of these are in our favor, but that's not 100% true. I'll take a trade when the institutions are in there if the market internals are neutral. As long as the institutions are in there and the market internals aren't against me, I'll take the trades. But that's how we find trade the best and skip the rest. All right. Now, how does it find these? Well, the Compass system or the SPY super system I'm going to show you here, we do what's called a triple screen assessment of 3 different things. We look at momentum, and a lot of traders don't understand momentum is not just because the stock's moving up or moving down. That's not momentum. There's a specific way to look at momentum. I'm not going to get into it right here, but momentum is a specific way to identify whether institutions are in there. So if we're looking at momentum across 3 time frames, we're looking at trend across 3 time frames, and we're looking at a money flow derivation, the derivation of money flow. We're looking at these. When all of those things are going in the same direction, right, or multiple time frames, the likelihood that the institutions are driving this is extremely high, in the 90s, 94, 95, 96%. You can miss some occasionally, but generally speaking, when this occurs, the institutions are in the trade, which means, okay, we want to be in the trade. Now, I'm going to kind of drift into what the Compass or the SPY super system software looks like. This is, and I just kind of wanted to show you these because you're going to see a bunch of these as we move along. Let's see. How does my team track trades, and what is your average amount of trades your group takes in a month? Well, you saw the trades that we took. if you saw that, Joseph, how many we take. You know, it varies on the market, because I can't tell you how many there's going to be. You know, some months we take 40, some months we take 20. It just depends on what the market is giving us. And do I have any securities that you trade off of? Well, I mean, we trade off of all kinds of stocks. I mean, I don't know what you mean by securities. I mean, securities are stocks. So we trade anything that's set up for us as long as it meets our criteria. Can I analyze the stock chart and reduce the size of the 4 indicators? On here, I can't on here. This is just a picture. I'll show you the other charts as we go along. Oh, stocks that I hold all year. Not in the service, Josh. I mean, I have some stocks that I hold in an investment portfolio, but that's got nothing to do with trading. That's investing. This is trading is different from investing. This is for trading. Okay. All right. So this is basically a chart of the compass system, the SPY super system software, and there's 4 different indicators on here that we look at. This is the long-term trend. This is the current time frame momentum. This is important. This is the current time frame momentum. This is important. These are the 2 that I use the most. These things are critical. And this is the derivation of money flow. I don't use it a lot. These are the 2 I use. Green and blue is bullish. Red and yellow is bearish. And we're going to look at a bunch of charts that look like this. Okay. Now, this is a 5-minute chart on Tesla, just to show you what we're looking at here, right? And this was using a Heiken action reversal. That's a particular strategy. But we're looking at this, these are all green. Anybody who's looking at this chart on 5 minutes and this is what they see, if they know what these mean, they know that the institutions are buying this trade. All right, it's everybody's buying this trade. Well, this is Tesla. It's going straight up. I know, Michael. This is back in July. Just to show this. So on here we've got the indicators here. Main one is here, current time frame momentum right here, and multi-time frame momentum. This is a 15 EMA of an EMA. This is a smooth 15 EMA. All right, and this little shaded area is what's called the dynamic compression zone. It is exactly what the compass system creates, a dynamic compression zone during the day. And these are pink arrows here, what's called pop symbols, a pop out of the box. This tells you that compression is being broken. They're a good indicator of the breaking out. And you see how the stock was moving sideways here and then broke out right here as it broke above this 15 EMA. That would be an entry for a 5-minute trade here. And you ride it up. And then when you start to see this kind of a reduction in momentum, take the profits. All right, so, and that's a 5-minute chart. So that's on Tesla. But that just kind of shows you that we're going to see a lot more of these. Now, the SPY super system, and I want to talk about separately from the regular trades we take. You know, we trade on Tesla and Bristol Myers and Microsoft, etc. This is a SPY super system trade. This only occurs in the room. All right, just in the room. Because these are pretty quick. They're running off a 5-minute chart. I can't alert on them, obviously. I can't even post them in the room. I call them out when I see them, and because I'll show the chart and I'll show them, and I'll show you some charts in a minute. But I've only been doing this since July. And the reason I did this, just so you understand, typically the service was for intraday, longer intraday trades and short-term swing trades. All right, so nothing that would be considered like a really quick type trade. We did some, but I did some of these, but I didn't introduce it in the room. But what I found out was there was a lot of people that came in the room, but they could only stay for an hour or 2 in the morning, an hour or 2 in the afternoon. And a lot of times we'll go all morning and not even take a trade because there is nothing set up for us. The market doesn't give it to us. So I introduced the SPY super system for a way for folks who wanted to, either in the room looking at the chart that I have or their own compass charts, to be able to take quick intraday trades off of the SPYs, the Qs, and the IWM. All right, so I introduced it in July, last half of July. This is what we've had. I have not had a losing month in this. It's been really, really good. But July super system, it's called. It's 2,000 invested, produced at 25.96 out of the super system, 82.01 in August, 56.6. We took a lot of super system trades. Remember, it was very slow in August, right? But we had a lot of super system setups. So 8,201. Now, this is not included in any of the profits that I showed in the room. Back when we were showing how much we made in each room, each month, you know, January, February, etc. None of this was included. This is completely separate, right? Then in September, 43 and 2, 40 wins, 3 losses, 2 scratches, 71.32. October, that's today. This is actually the whole month. 33 and 4, 2,000 invested, 42.01. So it's a lot of variation, but the profits are really nice. But the nice thing about the SPY super system is you're only going to have one trade on at a time. You just have to manage one trade, all right? And they're going to be fairly short durations. Sometimes 1 or 2 candles. Sometimes it may go for an hour. It depends on if it's trending in your direction. But so this is the results we've had in the SPY super system. Really good, as you can see. And I did, by the way, I haven't got through all of some of it yet, but I did want to recap the October results because we finished October. Again, this was our October results. In the trade room, 17 wins, 3 losses, 85% win rate, $8,583. And the trade alerts, 14 wins, 3 losses, 82% win rate, 6,063. This was our results for October. This is all the trades in October. Again, here's your 3 losses here. And again, you can see that, again, the percentages stay pretty consistent here. All right, 40, 35, 29, 17. All right, so that was the room. Now, on the SPY super system in October, and I don't list each one of these because some days you might have 5 trades in a day. You've got on the SPY Qs and IW, we had 33 wins. Now we had 33 wins for a profit of 62.29, and we had 4 losses for a loss of 13.98. So our profits in October, just off the SPY super system, has nothing to do with the other trades that we took in the room or on the alert service. 33 wins, 4 losses, 89% win rate, 48.31. Very consistent, very consistent. So if you take what we made in October on the SPY super system, which is 48.31, and you take it from what we made here on here, we had about 85. It's about 12,000, a little over 12,000 if you traded both of these. All right. So that's the SPY super system for October. So that kind of brings us up to date on what our results have been. Are the profits in excess of your costs? Are the profits in excess of my costs? Well, yeah, I mean, when I'm showing these profits, that's profits minus losses. That's how much we netted. All right. Now I'm not taking commissions into consideration because I don't know what people pay for commissions. I pay basically almost nothing when I use TradeHawk into Tradier, but these are the net profits in the trade. This is minus the losses. That's why I separated these two out, because we had 1,398 in losses on those 4 trades, but 62.29 on the 33 wins. Okay. All right. So let me just look at some of the. I'm gonna go to two things here. I'm gonna go over the SPY super systems trades that we took in the room, and I just because I want to show you the setups and how relatively simple it is to follow these kind of trades. Okay, so this is a SPY super system from 8.9. I wanted to identify the indicators. Now we looked at all these indicators, right? Long-term trend, multi-time frame momentum, current time frame momentum. All we're looking at for the SPY super system is this right here, current time frame momentum. All right, just the current time frame momentum, going from selling, which is red, to buying, which is blue. Again, red and yellow is bearish, blue and green is bullish. You see how this changed? Current time frame momentum changed from red to blue. This was institutions selling. This was institutions buying. All right, now look up here. What was I looking at? The VWAP, the volume weighted average price. You see that volume weighted average price? That's the pink line. Very critical support and resistance level. The 15 EMA, another very critical support and resistance level. It goes from red to blue. Immediately, I'm interested because I know that I'm going. Institutions are now buying. Then I said, okay, is this a good entry level? Well, the stock's been compressing and it just broke above the 15 and the VWAP right here. And I've got a pink pop out of the box symbol telling me compression is being breaks. Okay, so that tells you that I'm getting a breakout. So this is where we took the trade right here. Now, once it starts to go up, we're gonna use the 15 as our stop because you see the 15's pulling away from the VWAP. So we just stay right in it, never as long as it doesn't break below the 15. Now, as it gets extended above the 15 like this, then you've got to start being cautious. You know, some people might have taken profits right here, right? But I stayed in the trade, and then when I started to get these wicks and tails here on this doji, then I get out right here. But now that trade that lasted from here to here, these are 5-minute candles, produced $220 per profit per contract on the SPY. You're not gonna, these aren't all gonna be like this. They're gonna be, you know, there's gonna be ones where you make $25, $30 a contract, some 100, some 70. There's gonna be some you lose 20, but most of the losses are gonna be small because you can see if once it starts to move up, if it pulls back to the 15, you're gonna get out and you're gonna have a profit in it. But so this is what the SPY super system is doing. It's using this current time frame momentum and the VWAP right here and 15 EMA. Those are your support and resistance, and this is the key level that you want, right? And you also look at the market and see what the market's doing. The market's trending. It's going to be a lot easier. You're going to be able to stay in them longer, right? But that's the SPY super system. I've got a few of them here I want to show you just so you can kind of get familiar with what they look like. This was the SPY as well. These are all 5-minute charts. Here's our entry here. Notice here, this is already yellow. It was already bearish, and then it went to red. But when we looked at it here, it was bearish, and the stock was breaking below the VWAP with a pop out of the box symbol right there. So this is where we enter on this. All right, on this trade on. This was on 823. So it pulls down. Now it's below the 8 and below the 15. So the 15 becomes my stop here. So I just stay in this trade, and as long as the stock price stays below the 15, doesn't close above the 15. It got close here, but then it pulled right back. And I'm staying in the trade. I'm staying in the trade. And it flushes down. I have one other indicator here, which is called a pivot point. This can be support, so I have to watch it closely. But as it breaks below there, it flushes right down, and then I get a green candle here. I'm out. But notice it stayed red the whole time. You can see here that the institutions are selling the heck out of the SPY on this whole duration. But this was $280 profit per contract for one contract on the SPY. All right, so that was a pretty good one. And I'm just going to show you a few of these because I want you to just kind of see if you can see what I'm seeing here, right? So here's the current time frame momentum. First thing you look at. Okay, going from red to blue, going from selling to buying. All right, how's the stock price? Well, it's just above the VWAP, kind of moving sideways, right? So I'm looking for a pop symbol. Here it is. I get a pop symbol as it breaks above the VWAP. Take it right here. All right, just take it right here. And the stock slowly drifts up. It stays above the 15 the whole way. And then as soon as I get a red candle here, I'm out. I can kind of get an indication that it's starting to slow down here, but because of that wick right there. But I'm out right there, $150 a contract. So you can see that. I just kind of want you to be able to eyeball these and see what I saw. I didn't even put any arrows on this one, okay? So let's look at this for a minute. All right, so over here, we're red, right? See how it's breaking below the 15 right here? This is where I would take the trade as it breaks below the 15 and the pivot point right here. So you stay in the trade, it moves up, but it doesn't break through the 15, and then it pulls down, and this is where you would get out right here as soon as it puts in. This is not a big trade. This is maybe a 30, 35, 40 cent, $40 trade. But then here we go again, right? So now the stock's moving back up again. See, we go from selling to buying, red to blue. We're right at the VWAP. We wait for this to break above the VWAP right there. Breaks above the VWAP, we got the institutions buying, breaks above the VWAP, we take the trade here, we move it up for 5 candles. As soon as we get red, we're out right there. Again, not a big trade, but I want you to be able to visualize how easy this is. Okay, and IWM, this is another one we take. Again, no arrows here. Okay, what do you see? Well, it looks like it's pretty much buying across the board here, right? We have a few yellows in there. So what we're looking for is we're looking for a setup. So when do we get the setup? Well, we're looking as the stock comes across here, and we had yellow here, so I didn't take it. But now it comes down to the 15 and then pops. This is where I take it right here off the 15, all right, and take it. And it's not a big trade. This thing didn't go up an awful lot, but it was stayed green, so I knew to stay in the trade and took small profits in that. All right, and there's another one on the SPY. So can you see the selling here? Red as it breaks down below the VWAP. Right here, pop out of the box, take it here, write it down for 3 candles, you're out, right here. Again, they're not all going to be long trades. They're all not going to last a long time because if the market's choppy that day, a lot of times you have to be fairly quick on these. Another good one on the SPY here. Again, you can see we're getting a lot of mixed colors here. obviously I'm not gonna buy it right here as it's coming down. I'm waiting for it to touch something. So this is where I would have taken it right here, as it comes off the 15, either here or here. If it comes off the 15 and it goes from green to yellow, buying to selling, and then write it down and then out right here in this candle. All right, so I won't go through a lot more of these, but this is what the SPY super system looks like that we trade in the room. These are off of 5-minute candles. For people who want to trade SPYs, Qs, and IWM, or just want to trade these while they're waiting for other trades to set up for more of our longer term type trades. All right, it's another good one right here. You see above the VWAP right here? See, as the stock goes, it goes green, but you don't want to go long here. You're below the VWAP. When it goes blue, you don't want to be trading long here because you're likely to run into resistance right here. So it's green here, pops above the 15, wait, breaks above the VWAP, take the trade right there. As it's green, trade could take it right here, write it up, get out right here. Again, a small trade. All right, so that's all the SPY super system trades. Steve talking about some engulfing patterns, etc. Yeah, I mean, I look at candlestick patterns all the time. And candlestick patterns are important when you're looking to see what the market's doing. If you're looking for the market's been choppy and you get an engulfing candle and you've got your super system set up, that gives you a little bit more confidence that the stock is going to move. All right, so these are some of the recent charts we took. These are trades that we took in the room and on the alert service. All right, this is not the SPY super system. This is separate. All right, so this was Palantir. This is a daily chart. All right, so we took Palantir right here. Notice, again, now when I'm looking at the daily chart, I'm looking at, for these trades, I'm looking at current time frame momentum here and multi-time frame momentum here. I want both of these to be blue or green for bullish and red or yellow for bearish. I want both of these to be, I'd prefer to have the long-term trend also be green. But these were green here. Now, the reason I took it here is you notice that it's compressing, and then it's compressed here, and then it popped right here. All right, it popped right up, and this is where we took the trade, and we were in it for 2 days, and we got 31% profit in 2 days. This is our entry. This was our exit. The Twilio, another daily chart here. I'll have some 5-minute charts in a second. Again, right here, see how we got green, and then this was flipping back and forth. The current time frame, which was on the daily, was staying current, was staying green, was staying bullish. So I was okay with that, but I was looking for a break here. As it broke above the 15, I took it here and get out right here on Twilio. Right, 58% profit. We had a really nice profit in that trade. CRM, again right here. Now, this was one I took, and this was yellow, but the current time frame was green. This was a little concerning to me, but I love the price action because it's compressing here and popping off the 15. So I was willing to take a little bit of an aggressive trade on this by getting in and expecting this to switch to blue or green, which it did, and then get out here and 29% profit in 2 days. Lulu, this was a put debit spread we did overnight on Lulu. 56% profit, get in at $1.92, out for $3. Again, see the compression? See the red and all the red and yellow here? Institutions selling. Notice they were buying here, a little bit of buying here in the long term, but on the current was red and then it went to yellow. So we take the trade right here and we just take it overnight. And this was on a debit spread and we made 56%. So we reduced our cost by a lot. All right, what's a couple of questions here? Steve, your mind is trained to see them on the candlestick patterns. Yeah, I spent a lot of years training. I was with Steve Bigelow for a good long time, if you know him, as far as candlestick patterns are concerned. And I know them all inside out, and you can use them, but you can't use them in isolation. When you say small trade, are you putting in 2,000? Yeah, Josh, I use 2,000 as the baseline, but now when I'm trading, I'm cognizant of what the market's doing that day. If I've got a trending day in the market, then I'm going to go ahead and put what I consider my maximum into a trade. If it's a choppy day, I'm probably going to only take half size position. Steve Nissen, yourself, yeah. I mean, there's candlesticks. I mean, they're good to know. Good to know. But you can't trade off of it. I mean, I've known people that thought that they could just trade off of bullish engulfing candles and trade off of them, and they get killed because they don't always work. So, all right. So this was work day here. This was, again, this is a daily chart here. You notice we're blue here, kind of chopping back and forth here, but I like the setup, and it's coming out of this dynamic compression zone, so I take it right here. And again, this was a quick trade. We actually just traded this intraday. GCT. So again, you just want to see it buying. Can you tell if the institutions are buying? Yes, they are. What do we got here? A compression and then a breakout of this dynamic compression zone. Take it here, 26% in 2 days. MDT, another nice one here. Went from yellow to blue on current time frame. Long-term multi-time frame momentum was already green. So we took it right here. And we got 25% profit on this thing. It kind of languished for a while, riding along the 15, but still 25% was pretty good. Not every trade is going to be a monster trade. So BKTX, again, 30% profit in 3 days. Nice move up on this one. McDonald's, overnight trade, in at 8:30, out at 11:30 right here. Pop out of the box, see the dynamic compression zone in the daily. It's a daily chart. Popped out of it, took it here, get out the next day, made $300 a contract on that. McDonald's was a nice trade. Amazon, again, this is a 5-minute chart. This was 32% again in 45 minutes. Current time frame momentum, multi-time frame momentum, buying's going on in the 5-minute chart. Now the daily chart was also bullish. So we take it right here as it comes along the 15. I take it as it, I could have taken it here actually, but it was yellow, see? So I waited for the green and then I took it here and we rode this thing up for 45 minutes. And I made money on that. This is a one to the short side. I mean, I worked to the short side too. ENPH, compressing. Right here, we get a pop out of the box below the 15. As it breaks below the 15, we take it. Everything, they can see this massive amount of selling here on the institutions. So we take this and all we wanted to do is stay below the 15. And the 15 sloping down. So the longer it goes down, to get above the 15, once you go through a couple of candles, you'd actually be up money because the 15 is sloping down. But we just ride this thing down. We ride it down for about an hour. And I think this was probably a boredom exit. So it was just shifting sideways. You get bored and take profits. Verizon, this was a big one. This was, again, we get these really cheap options for $47, $45 a contract. As it broke below the VWAP, we were in this for 1 hour and we get out at $67 a contract. So $450 for 10 contracts, $670 for sell those 10 contracts. Really, really good profit in an hour. And then look at this, look at the selling. I mean, it's just not that hard to identify. All right, and this was before I actually introduced the SPY Super Systems setups. This is one we did, but again, you can see, you can probably see that now. See all the red, see it breaking below the 15 right here, and you just take this thing down. So that was a nice one. Well, this was a Tesla, and we actually do some overnight stuff. And I did this off of the Teslas right here when it had bearish. It was a pop out of the box to the downside here. Everything was red or yellow, especially current and monthly time frame. So I took some puts overnight, and you know sometimes you get lucky. We got lucky on this. It fell from 120 to 112. We stayed in this trade, so we had a really big gain in that particular trade. Again, I'm not just trying to point. I mean, we have a lot of small winning trades, and we have some small losing trades, and we have some big losing trades. So just be aware of that. All right, so that kind of covers what we're going to cover here. I hope that gave you a kind of a clue as to what the SPY Super System software looks like, as well as the system. And again, here's what we use. Talked about this: straight calls and puts, debit spreads and weekly options expiration, time spreads over earnings, which is non-directional. And again, all of these are strategies we use in the room. SPY Super System I use in the room, but I don't alert on it because they're too quick. I don't even post them in the room. They're much too fast. All right, see if we get some more questions here. George, when you trade looking at daily candles, how far out do you buy? Expirations. Well, and I'm looking at expirations. I'm looking at a couple things. I got to know when earnings is, and then I've got to make a determination how long I want to be in the trade. Usually, I'm not going to go out more than 4 to 5 weeks. That's typically about as far out as I'm going to go, because I'm expecting a move before then, and I don't want to overpay for the options by going too far out in time. Patience is right, Steve. Everything lines up if you're patient. That's why I say our objective is not to make trades. Our objective is to make money. Try to keep people from over trading. Do I suggest to take the market orders or limit orders? Always limit orders. Always limit orders. Please don't use market orders, ever. Well, I shouldn't say ever. There are times when you do it, but for all intents and purposes, please don't take any kind of market orders. And if you put a limit order in on a trade that comes out an alert and you don't get filled, don't chase it. And typically, it's going to pull back. You're likely to get a pullback. If it doesn't, you miss the trade. But you don't want to be overpaying for anything because we may be taking 30% profit when you're looking to get in. Okay. Dan, so with Tesla overnight trade, could we use the strategy signals to use puts on other stocks if we can identify them? Yeah, absolutely. You can use the SPY super system that I showed you, which was, looking at the current time frame momentum, changing colors from buying to selling and stuff. You can use that same strategy on stocks if you want to. I use them on the SPYs, the Qs, and the IWM because there's so much liquidity in there and I can get in and out of them fairly quickly. I don't worry about what the daily chart looks like on those. But when I'm looking at a stock, I'm really more interested in being able to hold it for a couple of days if I want to. Yeah, it can short them overnight, no question about that. But you got to be careful with these gaps. The stocks, you got to go out enough time so that you can withstand any kind of stocks that turn against you. All right, so there's the strategies. Let's go ahead and go over the specials again. This is really a special. So if you're interested in all this stuff, which I think this is going to improve your trading. And I'm going to be, when I get done here, I'm going to switch over to a live Compass platform so I can show you what it looks like with the scanners and stuff. But again, right now they're giving you the alert service in the live trading room together. These are generally sold separately. You either buy the alert service or you buy the room. You're going to get both the room and the alert service, and you're going to get a 2-week free trial. After 2 weeks, it'll switch over to a quarterly subscription, which is $396 a quarter. All right, that'll be activated after the trial period. But you're going to get the alerts, you're going to get the trading room, and you're going to get the Wise Way to Trade Masterclass here, which is I got about 30 videos on all the strategies you use, all the indicators in the Compass system, how to use them, how to find high probability trades. I've got videos on diving deep into technical analysis. So that's the 2-week trial here on the trade alerts and the trading room. Annual, if you want to do this and get a lock in a good price, $11.96. It's going to get you the alert service and the room. This is normally not right. You're going to usually get the alert service separate, the room separate. You got to pay for both. Here you're getting them both right now. All right, and you get the Discord and you get the videos, of course, that you always do. And if you want to do a one-time payment, this is lifetime. If you want to get in and never have to mess with any of these annuals again, you pay $24.96. You get both the room and the alert service forever. So that's really, really good offer. Now, the other one thing we have is if you want to buy the software, okay, the SPY Super System. Okay, this is the SPY Super System. This is the software that goes on your Thinkorswim platform. Okay, so it's the Compass trading system access. It's going to have scanners in it. It's got the videos again. They'll put the software, the SPY Super System software, sometimes called the Compass, on your Thinkorswim platform. You don't have to do anything except buy the software. They'll install it for you. It's going to look exactly like mine. All right, and you're going to get a month in the live trading room and a month of the alert service. You're getting the alert service and the room for a month if you buy the software. $14.98 for a year. Really, this software, if you're serious about trading and you want to know when the institutions are in, this is really going to help you a lot. All right, and this is a lifetime on the Compass or the SPY Super System software. Right, again, you get the trading system, you get the scanner, you get 3 months in the trading room and 3 months of the alert service as well for $19.98 for a lifetime. That's for the software. You own the software for good. It's always yours. And having the software yourself, you can trade anywhere. You're always going to see if the institutions are in this. So those are the offers. Again, this is really, really a good offer as the fact that you can get the alert service and the annual, and the room together, either for quarterly if you take the 2-week trial, or if you want to do it annually, you get it right here for $99.96. And this is one-time payment is lifetime, $24.96 for the room and the alert service, and the Compass or the SPY Super System software, $14.98 for the software, which gives you a month in the training room and a month of the alert service, $14.98 or $19.98, $500 more. You get it and you have it forever, and you get 3 months in the room and 3 months of the alerts. All right, so this is really a special deal. They've never done this before, so this is really a good deal. So if you're interested at all, I would take advantage of this. I mean, this is really something that doesn't come along very often. Lifetime is forever. All right, I think we've answered most of the questions here. In the chat box will be links to the two specials right here. This one right here for the room and the alert service, and this one right here for the software. All right. SPY is separate from the room. The SPY Super System is called out in the room, right? So when I'm gonna have the room open, the Compass software, the SPY Super System software is running in the room, and you can see it. And I'm going to identify SPY Super System trades when I see them. Now, if you have the SPY Super System yourself, if you have the software, then you can identify them yourself. But it's not separate. The software is separate, but the SPY Super System is called out in the room. Lifetime comes with the right here. The lifetime of this comes with the SPY Super System. This right here is the SPY Super System. Remember, let's not confuse here, okay? The SPY Super System is two things. It's one, the actual piece of software is called the SPY Super System, and then we have a methodology that's the SPY Super System using the software to actually create trades or do trades off of the indexes. Right. So this is, when you're looking at this is the SPY Super System software. This is what it looks like on Compass. Right. The SPY Super System methodology is what we looked at right back here. Right. Which is right here. Oops. This is the SPY Super System software. This is the software, and this is the methodology. So if you're in the room, you're going to get this. If you buy the Super System software, you're going to be able to identify these. Dan, great strategy, easy to understand. Yeah, I believe it is. I mean, I've worked a lot on this. If I take the trial, will Black Friday offer still be available? I don't, you'd have to check with Rory on that. Put a question into Rory on that. If you take the discount, because it's what it looks to me like is it's going to roll over to a quarterly. You're going to be doing this on a quarterly basis. All right. If you're getting the trial. If you're getting a trial, it's going to go quarterly. But you can talk to Rory about that. He can probably talk to you and work something out. Yeah, Rory said, please call him. He'll work that out for you. What is the difference between the SPY Super System and the Money Flow Tracker, which you already have? Money Flow Tracker, Sylvan, is basically the SPY Super System software, or the Compass software, in essence, and running on Ninja though. It runs on Ninja, so it looks different. Money Flow Tracker runs on Ninja. It's basically meant for futures. The Compass system, or the SPY Super System that I use here, I typically don't trade futures off of it. You can, but I don't. I trade stocks, options on stocks, and I trade on the SPY Qs and IWM. But the Money Flow Tracker is tracking the same information that the Compass system and the SPY Super System are tracking. All right. Now I do want to pop up the Compass system, the SPY Super System. This is my own platform right here. This is running here. This is running on Thinkorswim. So this is my Thinkorswim platform. I can move the scanners out of the way. I get a full view of this. If I look at here, I can look at SPY, for example, on last Friday. Here's the SPY system right here. This is the SPY right here. You can identify where there were some setups. You know, if we go back and back and back, we're looking for setups on these things. and you can see how green it is through here. Then it switches to selling here. So if you were long here, you would get out as it switches back and forth. But this is what it looks like on my platform, on my monitor, and this is what you're going to see in the room. If you're in the trading room, as part of the trading room, this is what you're going to see up all day. And I'm going to switch this between individual stocks, etc. Now we have a bunch of scanners in here too. Now this scanner here, this is called cascading up. This is looking for stocks that are moving up on a 5-minute basis, green candle by green candle. So if the market's moving down and you run a cascading up scan, it's going to show you all the stocks that have relative strength. These are cascading down. If the stock market's moving up and you're looking for stocks to short, perhaps you're looking to get short later in the day, or if the market reverses, these are going to show you stocks that are relatively weak to the market. And all I have to do on any of these is just click on them, and it brings the chart right up, just like that. So if I'm looking at any of the charts, a Sophie, beautiful 5-minute chart on Sophie. Again, if you look at Sophie here, go back a little bit. See the red to blue right here, selling to buying, and you see the pop out of the box. This was an entry, like a SPY super system type of entry on an actual stock, which is Sophie right here. Notice it's above the 15. VWAP's way down here, so it's above the 15, and you ride it right here, and you just take this thing up, and it stays green all the way. And as soon as it starts to compress, you get out. All right, so that's what it looks like in the room. This is what you'll see in these scans. This is new yearly highs. There's a few other scans that we've got in here as well. So is there a filter to check many stocks, whether they may be trending up or down? Is that after hours or pre-market? I mean, I do a couple of things. This is, first of all, I have TC2000, which is another scanner, but this is looking at, on a 5-minute. Now I can do a cascading scan up on a daily, right? I can look at the daily, and that's going to tell me stocks that I could perhaps want to enter in for a swing type trade, right? So this cascading up and cascading down can be run on a 5-minute time frame or on a daily time frame. Okay, let me switch back to the special here. So there's the special. I mean, if you're interested in this stuff, this is what you want to take advantage of, because this is getting both of these together is really, really a big benefit. And again, this is the actual SPY super system itself. That's the software, and that is the room and the alert service. All right. You trade SPX most of the time. You don't really trade futures. So when I bought the money flow track, I asked if it was good in SPX or SPY. Yes. You know, the thing is, I can't tell you whether it's better or not. I mean, I'm so used to using the SPY super system and the Compass system for trading, but you can trade futures. The big advantage to trading futures inside of Ninja is the commission rate on futures is cheap on Ninja. If you're trading think or swim and you're trading futures, then the commission's rate higher. Now, if you're trading SPX, is just like trading SPY. So I mean, you can trade SPY, you can trade SPX instead of SPY off the Compass system. It's going to work perfectly. I mean, I can put any particular. I can put anything I want in here. I mean, if I want to see like the futures, I can look at the ES futures like that. Or the NQ futures, I'm going to get the same information no matter what symbol I put in there. But most of the time I'm using SPYs, Qs, IWM, and then I'm looking for individual stocks as well. Okay. All right, well, I think I've used up a lot of Saturday. Listen, I really appreciate everybody being here. If you have questions, please call Rory. He'll take care of that. Also, we have the links in the chat box that will take you right to the orders for these particular services, the alert service of the trading room, and the SPY Super System software, which will have your complete workspace. They'll put it in for you. They'll put it on your TOS platform, which you don't have to buy. You can install a TOS platform and put it right on there, and it'll look exactly like mine does. Steve, thanks for being here. I appreciate it, Steve. Thank you very much. Thanks for all your your call outs and information on the different strategies, as far as candlesticks, etc. Dan, appreciate it. Look forward to seeing some folks in the room and the alert service, and you'll be in both of them if you take advantage of this today. So take advantage of it. Have a great weekend. We'll see everybody back in the market on Monday morning. Thanks a lot, Robert. Appreciate it, sir.